Excellent. Good morning, everyone. Kevin McLaughlin, MTech Capital. I'm pleased to be moderating this discussion this morning. Topic is how AI, IoT, telematics data are, as a practical matter, integrated into insurance. Could be through new products, underwriting, claims. What is actually the value that's being extracted today from AI? What can we expect from the future? So let me first start by having each panelist introduce themselves. Atar, you want to begin?
Sure, absolutely. My name is Bhaskar Kalita. I manage the insurance and financial services business at Quantify. We are a AI-first digital engineering firm focused on helping customers reimagine and realize transformational opportunities at the heart of the business. We believe we have defined this new category called AI-first digital engineering, which is basically using AI and data across the value chain of a transformation, starting from experience, automation, insights, and then data and infrastructure. Happy to be here and excited to answer all the questions that you might have.
Sue?
Hi, I'm Sue Hirons. I am the Director of Data Governance and the lead of the data management community for the insights and data practice of Capgemini. We work primarily in financial services in the UK. Been 26 odd years in data, so I really am that proverbial data geek, and it's really great to have some data questions to answer today.
I'm Neil Kempston. Nice to be on the panel. Thank you for having me. Nice to meet you all. I'm an incubation underwriter at Beazley. Beazley's a specialty insurance company. Incubation underwriting is a fairly new function. We've been around for about 2 years. Our role is to discover, design, and develop brand new insurance propositions. We sit external of any of our sort of product-specific divisions. We sit within corporate development. There are kind of 2 channels to which we normally look at new product opportunities. One of which is Beazley branded products, where it says Beazley on the tin. We do the underwriting. It's brokered, intermediated in the sort of typical way. And the other angle is working with insurtech partners to develop new product opportunities in new markets, whatever that may be. We're part of the Lloyd's Product Launchpad and contributors towards the Lloyd's Lab.
Hi, my name is Ashok. I look after digital data and analytics for AXA XL globally. AXA XL is the specialty commercial insurance division of AXA Group. And again, here I'm super excited to, one, learn from my fellow panelists and also from some of the questions that I would expect from the audience here, and would be happy to share whatever insights we have.
I really like the mix of panelists we have. I guess firstly, because so many of us think about the applications of IoT, telematics, as being personal lines oriented. It's good to have representatives of 2 commercial lines insurers here to just expose what's going on more in that space. And then of course we have 2 people who are operating kind of at a higher level, working across insurers, have kind of that helicopter view of what's happening across the industry in terms of implementation of AI. All right, let me start with the first question. And so the idea would be we go through a number of questions here, and we'll leave about 10 minutes in the end for you folks to send us questions. I can look at them here, or you can just wave for the microphone. So maybe, Bhaskar, we'll start with you. In what respects is the collection of all of this data, the cleansing of it, and the analysis of it actually resulting in improved insurance products?
Yeah, so I'll take a step back in terms of the topic, which is telematics, IoT, and the data that it provides. Carriers who are using them effectively, and first to your specific point in terms of cleansed data, they're definitely getting real value out of it, right? Whether it is trying to underwrite risks better, that's from an underwriting standpoint, but prior to that, also identifying customers knowing what kind of needs they have, you are getting a lot of lift there in terms of narrowing down the funnel, understanding which customers to target, and then obviously you go down the path of looking at how to write risks, and then further down the value chain when you look at servicing these customers and on potentially responding to claims, these additional data points are providing the much needed lift in terms of serving your end customers end to end holistically. So there has been a lot of lift, but you're absolutely right. You need the right data to service those customers appropriately. Without the right set of data, without the right set of profiling that you need to do upfront, having the right business knowledge to know what data to target to effectively build these solutions, you may not get the lift that you are looking for.
Sue, what do you think?
He just stole my words. I mean, how unfair is that? But yeah, I actually have to agree with you. I think there's a massive amount of data coming in, and I like the fact that I'm seeing it as becoming cleansed, because when you bring it in as this big dump of stuff, if you don't take care and look after it properly and make it cleansed and make it useful, nothing you do in the insurance industry is going to actually make the difference to what we have already got today. So for me, seeing it happen and seeing it getting clean and seeing it getting used and seeing it getting used ethically is really my big thing at the moment. I think we're going the right way.
Just from my previous life in investment banking, I think of a meeting I had. It was down in Latin America with the CEO of a very large P&C company. And I remember him telling me that the big motor insurer, all of the cars that they insure have telematics boxes. And I thought this is 5-6 years ago. I thought that was quite advanced. And I said, so tell me about the data and what you're doing with it. Has it actually resulted in improved loss ratios? He said, well, we're not really using the data. And he said, it's mainly the behavioral impact. And he said, in any case, our kind of rating and pricing systems really can't accommodate all of this new data. So, Neil, what do you think?
Yeah, it's tricky because, I mean, I'd probably be told off if I didn't use the word legacy at one point today. So as insurers, we have a lot of legacy challenge in terms of our systems. So part of the difficulty is what we'd love to do is take on all data all the time and be able to do everything with it. Now, realistically, that's a difficult thing to do, and a lot of the points that you guys have made around having it put up into a structure that we can understand and react to is really important and really helpful for us. So it's being able to see where the value add in terms of the effort to return. Now, if we were doing something more, detailed and build on an existing portfolio, which is not typically where I look, then there's a different sort of value case to sort of take on that large volume of data through direct connection. But we're quite lucky as an industry to have a lot of data experts in actuaries that help us work through lots of different things, take packets of data, work with partners that can package them in the right way so that they can understand them and look at different opportunities. So we have sort of some challenges, but we also have some real advantages.
In that respect, Ashok, at AXA XL, are you actually seeing improved loss ratios from IoT telematics data?
Oh, absolutely. So, and I think earlier you touched on this point about is IoT and telematics only for personal lines and what is the space for commercial insurance? And maybe just to kind of on also behalf of my friends at Beazley, just let you know, think about it, right? So we insure lots and lots of ships. We insure lots and lots of airplanes. We write a lot of cyber business. If you think about it, all of it is data. And if you're, let's say, a kind of shipping company, and currently in Shanghai, there is a big kind of logjam of all the shipping containers waiting there. What if you're able to understand actually this particular container has this, let's say, perishable good or whatever, and we're able to kind of tell you this is the current state of your kind of goods there in that particular kind of transshipment point at this point in time. It's great for the client. Of course, it's also important for us because that's a material risk for us then and there. And we have a live kind of update on what's happening to our risk real time. And I think that's a very, very simple way to think about it. And I think that's where probably sometimes commercial insurance may not necessarily be the first when it comes to mind of people, right? Because usually you're thinking about, oh, motor insurance, and can I plug this device and will my insurance premiums go up or down? But I think there's a lot more broader applications of this.
And what are some of those broader applications in commercial lines? In other words, what are some of the new products that you can imagine, by virtue of having AI and available to analyze a lot of new data?
So the marine example I gave is actually not a random one because it's a live one where we actually have a product in the shelf today where actually we can kind of support our end clients with one, tracking their real assets in real time and what does it mean from one, an insurability standpoint, and also what happens with the risk. So that's one example. I'd probably, should I give it to Neil for, I think, because I think you guys are doing a really interesting piece of work.
Yeah, I mean, there's lots of different things out there. I mean, one of the challenges we see in our team with IoT specifically, not necessarily the sort of AI machine learning side of things, but on IoT is scalability. So, and sort of multiple applicability of whatever the device is doing. So if there is a device, if there is a sensor, if there is a data point, wherever it's coming from, satellite, whatever, or a sensor in a thing, it has to have more utility for commercial, buyers than just the insurance. So for them, it has to provide sort of risk management expertise for the example you gave around, understanding where their things are, so they can communicate with their onwards customers and challenges within that. So that's a bit of a challenge we've seen from a technology perspective. The kind of things that we have seen where there are companies implementing sensors within their overall infrastructure, things like renewable energy, so they can keep an eye on their turbines, things like manufacturers, so they can see the sort of the quality of the bearings that they have within their equipment, so they can replace and repair as they need. So that has sort of multiple utility. One of the things where we see that in a very sort of short term making a difference for typical insurers is that as a risk presentation and risk understanding is really helpful because it can differentiate risks as they come to us, which helps our underwriters do risk selection. But yeah, so lots of things out there.
I'll add one example to that. It's a company in the MTech Capital's portfolio, actually. It's called Voxel. It's based in the U.S. on the West Coast. What they've done is through computer vision, they've developed software that can just plug into pre-existing security cameras, for example, in warehouses and in manufacturing plants. And they have trained the software to identify risky situations. So it could be a forklift operator operating outside the lines, in the warehouse. It could be, just a worker lifting up heavy packages, right, with the wrong posture. And it then flags these situations, actually produces an email, shoots it to the warehouse manager, and then he or she is able to go to the employee and say, here's a video clip. This is the kind of thing that we need to change. And it's all about reducing workers' compensation injury claims.
Yeah, just to add to it, we solved one problem for one of the largest amusement parks where we put computer vision models in the security cameras to track, safety measures when somebody is taking a ride. There are risks out there, the organization is Disney. So, tracking safety measures, and that helps you kind of reduce your risks drastically. So that's one example, just to add to it.
Yeah, and one we've seen as well that was really interesting is implementation of a wide range of sensor technology within like a shopping mall, for example. And through putting that technology in, they were able to see that safety-related potential issues were being remedied within minutes rather than within hours. So from a public liability perspective, that's really sort of interesting. If only Beazley was in that space. Damn it, can't get to everything. But that's a really sort of interesting application. That some of the challenges that come with these things is to actually deploy that kind of capability across a portfolio is difficult. So to then have in an ideal world, everyone would have it. It'll be completely integrated. We'd be able to do live risk assessment.
But it does raise an important dimension here with respect to privacy.
Yeah.
Mm-hmm.
So the idea that you've got cameras in shopping malls, you've got cameras in warehouses. Sue, what do you think about the data privacy, and is is it a potential obstacle to developing AI applications on this data?
I'm actually on the side of it being not an obstacle, but an opportunity. And I think that being able to get out to individuals, organizations, about how the data that you're getting, even though it's related to a person, for example, can improve things such as your chances of falling off a Disney wheel thing, and I'll never go on one of them because I'm scared of them, or in a shopping mall handling risky situations. I think it's about changing the communication around and saying, yes, your data is private to you, but it's also secure with us. We're looking after it. We're making it work for you. So changing the communication and saying there's regulations about data privacy, but we can use them for the good. Currently, there's a very big feel that a regulation about data privacy is a negative. Have to change that. When you change that, you're going to change everything, the way the insurers think about things, because it's become a value add rather than a deficit.
I do wonder, though, for example, how do you create that environment of trust? So if you now go to personal lines and you think about some of the applications of IoT, it can be on, home security systems. It can be on, obviously, appliances, plumbing, monitoring broken pipes, that kind of thing. So that's your house, and there's constantly information being fed from your home to an insurer. How do you create an environment of trust so we just say we're not getting that because it's a little bit too much Big Brother, a little too intrusive?
Oh, good. I get to answer that as well? Great. Okay. It's communication. It's putting yourself in that person's shoes. I'm a data person. All I do all day is data, but I walk in the other person's shoes. If I can do that and understand from their perspective what their concerns, their issues are, things like, oh my God, my house is suddenly talking to everyone. I mean, if you've got Google or Siri or what's the other one, Alexa, they listen to you. I don't know if you've noticed it, but all of a sudden you go onto Facebook and you've suddenly got a whole bunch of adverts that you can't possibly have dealt with. And then you go, oh, Google was listening. So if we're already getting that far, what we have to do is, again, it's about changing the way people perceive. It's perception, nothing else but perception. I look at this and I turn my Google off because I don't want to get those adverts. But that's because I'm quite sort of irritated about things like that. But a lot of people don't mind it. And it's about turning it into a value add, a benefit.
I think as well there's a part to play with articulating what the value of that data point really represents.
Yeah, exactly. Oh, your fridge is going to break down in 5 weeks. That's a real value add because now you know you've got to get out and buy a new fridge, that you can save money on the food that's going to go off because your fridge broke and you weren't there. Things like that. That's the kind of value that you've got to show. And you've got to make it simple, visible, very visible, because people respond to the visual. You know, when you put a report there and it's a whole bunch of words, people don't watch, they don't listen. Like behind us, I don't know how many people have actually gone and had a look at that without going, oh, that's lots of words. But what if you'd made it pictures? People would go, oh.
Right.
Challenge to everyone there, come and take a picture of this today.
And turn it into pictures.
Bhaskar, what do you think? By the way, you're based in Chicago, right?
Yeah.
You see kind of a difference between what we have in Europe with GDPR and those now legal protections around data and the U.S. approach?
Again, I echo and concur to what both of our panelists said. One thing I want to add is bring the right level of transparency. Make customers aware of how are you using the data, right? I mean, to your original question, is it an obstacle? Some use cases probably yes, but in most I would say that there are techniques involved in terms of how you anonymize data, how you train models, etc., which makes it much more simpler. But making it transparent to the broader group, to your end customers, is extremely important here, so that you bring the level of trust. And I think that's what Sue was referring to, right? Making it as visible as possible.
Let's talk a minute about partnerships and how working with the right partner can actually advance the usage of AI. Ashok?
Yeah, so I mean, first and foremost, I would say at least for AXA XL, we are very clear. We are good at some things. There are a lot of things where somebody else is good at. And we recognize that. That's absolutely fine. Because we are insurance experts, we are risk experts. We are not necessarily, let's say, a AI digital first expert. That's not our space. And equally, for example, do I trust a Microsoft or an Amazon to do kind of infrastructure better than us? For sure, right? From a tech infrastructure standpoint. So that acceptance is the first and foremost thing. And then it's a question of how do we collaborate and how do we make 2 and 2 11 rather than thinking about, oh, this is my space and why are you kind of in this space? I think that's a kind of fundamental mindset shift that we have kind of gone through. And that's something we are kind of very comfortable with. So whether we are talking about partnerships with a startup, whether we are talking about a partnership with a huge company like a Microsoft or an Amazon, or whether we are talking about kind of working together with our broker partners. I mean, all of this, we are very, very comfortable because we recognize that's the only way for us to actually succeed in making meaningful difference for our clients. Because if we want to do everything ourselves, I'm not sure how good we'll be at the things which traditionally we've not been good at.
And how would that, for example, work if you were, AXA XL were looking to partner with a, let's say, a commercial vehicle manufacturer, an OEM, okay? They're bringing the data. They don't have the AI expertise. You've got the insurance expertise. Where do you get the technology component of that?
Yeah, so for example, right, today we are talking about motor insurance in the sense of individuals as pretty much, I guess most of you here drive a car and you have your own insurance. Now, this is today. And we are already there at the cusp of a technology change where how much of the car is driven by you versus by the software itself. So in that sense, let's say if you're in an accident, is it the driver's fault or is it the software's fault? And how do we kind of draw the lines between where does the liability lie? Mm-hmm. And I think those are the points where we're thinking about, one, collaborating with the car manufacturers and more importantly also with the software provider, because not necessarily the car manufacturer is the one who provides the self-driving software. Some cases yes, some cases no. And for us it's about working with this kind of value chain of partners to say, one, how do we ensure that first and foremost the car is safer? That's the fundamental number one point. We want the car to be safer. We want people who are in the car to be safe. How do we achieve that? Once we kind of get that sorted, then the next question is, if and when something goes wrong, which is where obviously insurance comes into picture, are we going to talk to the individual driver? Are we going to talk to the car manufacturer? Are we going to talk to the software provider? And that's the kind of piece we are looking at when we're talking about collaboration with, let's say, OEM players.
I think to build on that as well, in my team we're very small. There's only 2 of us, so 50% attendance here today. And part of that challenge that we have is often we'll have organizations approach us that are kind of solutions looking for a problem. So a really good thing for us, and we see it, is where sometimes that partnership between a technology expert and someone like an OEM has already happened. So they've already partnered on delivering a solution for that OEM that is specific to the challenges that they have, but then they also have discovered some risk application. So then they come prepared with the challenge, with the problem, looking for an insurer to, like you also mentioned previously, apply our expertise, because we're not necessarily always software companies, are we? And that is something that we really look for when we're looking for new opportunities.
Bhaskar, in terms of who is leading in this space, the application of using AI for underwriting, for marketing insights, etc., are the legacy insurers at a real disadvantage here? Is it mainly the insurtechs that you see leading in this space?
Generally, you will see the Lemonades of the world coming and kind of disrupting the market, if I may give one example. But on the legacy side also, there are a lot of firms who have really progressed, Geico being one of them from a North America perspective. But I would definitely like to call out, piggybacking on what Ashok just said, Tesla. Now they are writing car insurance, in 4 states in North America. They're probably at the topmost level. Getting all real-time data, knowing when the car is driving, when the machine is driving it versus when the human is driving it. They will probably be the gold standard here in terms of using IoT and telematics. That's one new kid in the block, if I may use that term, and I'm sure everybody else will be chasing them at this moment.
So what do you think? Can the incumbents, compete here?
Well, first of all, I've turned all my telematics and stuff off my car. I drive my car, not my car drive me. Okay, sorry, a bit old-fashioned that way. But I do think that the smaller, sort of more flexible, agile organizations are ahead of the game. But I think the more traditional organizations are seeing this and very fast going, hang on a sec, this is good, I could use this. So I think over the next couple of years, you're going to see a massive explosion of this. I think it's almost going to overtake the ability of insurers to manage it, because it's going to just mean more and more and more data. And they still have to go back to their customers, whether they are individuals or commercial properties or enterprise, whatever person or organization that you're insuring. You're going to have to start going back to them and getting them to buy into this as well. I mean, let's talk about telematics as a thing. Okay, so on fleet management, telematics is a big thing. Mm-hmm. However, when you're thinking about personal, the guys using telematics, it's the people who've got teenagers and they're getting their first car. So you're hitting 17, 18 and suddenly you're getting a car, and you get great insurance rates if you've got telematics working to stop your teenager going over 50 miles an hour, to stop your teenager from swerving, or to stop your teenager from doing all sorts of things. So taking that, you need to just change that slightly more and get more people to be involved in saying, well, I could turn my telematics on and let my car drive me.
Neil, what do you think? You've done something really innovative at Beazley to create this incubator.
Yeah, so I mean, one of the things that we also have at Beazley, which we're quite lucky to have, and we've been on a bit of a journey with data science, is we have actuaries, but we've also got a separate data science team who is headed up by the fantastic Ben Postance. If you don't know him, you should, he's amazing. And they look at lots of different things, and there's lots of different applications that they've done. Part of what they've built up within that team is expertise to look at partnerships, which helps us understand different companies when they come to us. They've also been able to implement their own expertise. So we created a ESG-focused syndicate, Syndicate 4321, which enables us to offer additional insurance capacity for specific lines of business where the organizations have an ESG score that meets the standard. And a large part of us being able to do that was taking an external data set and attaching it to our own, which sounds really simple, but it isn't. Because when I'm going to say legacy again, when we have legacy data, connecting that to different data sets is challenging. But we've been able to do that. We're also implementing some of the capabilities they have for risk screening, which helps us too. Lots of different applications as well in terms of looking at additional data sets out there, identifying opportunities beyond our existing portfolios, looking at clusters of risk opportunities, each end of the spectrum. So there's lots of things that having an internal team does, but we're not a data science company in our sort of core. We're an insurance company. So we recognize that there is growing capability out there. You have the agile insurtechs, which my team interact with, and we have to because we're small. And as an organization, Beazley, we kind of punch above our employee capacity, or at least we try to. So being able to partner with the agile ones helps, but making sure that they're at a position where they can stick with us for a long time is really important.
Ashok, in terms of where we see IoT and telematics today, where it's being used, there are definitely applications we've talked about for commercial lines. But what I'm wondering is, because you get lines of business like motor, home, high frequency, low severity, you get tons of data points around claims. Does that imply that the application of AI to more complex commercial lines is limited by virtue of the fact it's just you get lower frequency of claims and hence less data?
Not really. In fact, far from it. One, it's lower frequency, but then if you start thinking about the value question, right? So let's say a typical personal lines insurance, again, I'm just making this number up here. Let's say it's a £5,000 or $5,000 claim. You're probably talking 50x, 100x higher claim when you're talking about commercial insurance. So the value question becomes completely different. And just because the number of claims is lower doesn't mean the value at stake is not, it's kind of probably at even bigger scale. Right? And so it actually makes much more sense for us to invest in kind of things like IoT and telematics to understand what drives a potential loss and of course try to prevent it. One, it's great for an insurer if you can prevent a loss even from happening, but even more important is ultimately the client should not be suffering, because one thing is if I am concerned about the client has, let's say, a machine breakdown or his factory is flooded, it's bad for me, but it's even more worse for my client. So I would rather the client doesn't have to go through that in the first place. So from that standpoint, absolutely, I would say you don't necessarily hear a lot about IoT and telematics in the commercial line space just because it does not necessarily touch each and every one of you as an individual, but from a B2B standpoint, there's massive, massive applications.
Yeah, I think as well there's different angles to the use of AI. So one of the products my team underwrites is reputational risk, and we've partnered with a company called Polcat, and what they do is they use AI and natural language processing to look at everything that's out in the digital ecosphere for organizations. So what are people saying about your company? So for them, being able to sort of scan the horizon for the challenges that are coming to them, that means that they can understand and react to different kinds of sentiment. Now, that's not a direct, will have a direct implication on our claims numbers in terms of that number comes in, that allows us to do this. But it's a service that we've partnered with an expert, which we are not an expert in, to make sure our clients have additional expertise they may not have had otherwise, and that enables that risk to sort of be more of a solution-orientated design rather than just a reactive indemnity product.
Yeah, just to add to it, I think on the commercial space, the more data you have, you drive more insights. It also enables you to understand newer risks. What's happening in this whole commercial space, general insurance space, in way, customer behaviors are changing. You have different perils coming in. It's extremely important to know what kind of risks there are outside, right? So it helps organizations like AXA to see if they can create a new product or a variance of a product once you get more insight. So that's a big application here.
I think if we take COVID, if somebody had sat here, February of 2020 was it? And they'd said, listen, the whole world is going to shut down. We'd have all laughed at them. We've now gone through the whole world shutting down. And I think this has brought amazing opportunities for insurers to take all of that data that's out there and revisit it and actually go, well, how can we use it to the good of not just us, but our customers? Because insurers need to be as much customer-centric as they can be.
So do you see in that regard, COVID having accelerated things, for example, at, say, Beazley?
I would definitely say so. One of the things that the adaptation of that we've all had to make during COVID is, virtual meetings, where initially that must have been and can be still quite painful. That means that we're able to communicate with a much more, much larger part of the globe than we would have done previously, which means for us, we get more opportunities to speak to more different types of organizations from lots of different backgrounds. The other thing that you pointed to is looking at, misconceptions or preconceptions you have that may or may not have been right, and applying AI and data science and machine learning based approaches to better understand that challenge. Now, one of the things we launched was we worked with a partner company who came through the Lloyd's Lab called Gaia. That's IVF insurance. They looked at 30 years worth of fertility data and applied a machine learning approach to that to understand different risk profiles, which means that we can actually look to find a way to insure, IVF programs that people go through. Now, that's obviously back to the consumer end of the scale, but that's looking at a complex area, but using, innovative techniques and challenging, misconceptions and preconceptions around it so that we can do something for the client.
And in terms of your confidence at Beazley to say, to underwrite a new product like that, new risk, you've got a major focus on cyber insurance. So by definition, that line of business, you're using digital data all the time to
Exactly, yeah.
assess risk and price it. Do you find that being, a major player in cyber has helped with respect to other lines of business and the adoption of AI?
It certainly helped us sort of put off a good foot forward in terms of innovation as a sort of an approach to Beazley. It's sort of core to our brand. We like to think, and being sort of one of the first out there in cyber really helped sort of cement us. It does open a lot of doors. What it also does is means that we're constantly evolving our perspective. One of the things that we do, and I'm sure lots of other insurers do, is do scans on the sort of external facing ports that our insureds would have, so we can then provide risk guidance on any challenges they may have, which means it isn't necessarily AI, but over time there might be some components to it. But yeah, it's something for us to, being a large cyber insurer means we have to be aware of a lot of challenges, as my colleagues at AXA XL will have.
Bhaskar, one for you. How can companies optimize? Now, this is a question from you folks. Optimize the way they store and analyze data across a customer life cycle.
Good question. I think I'll answer it from an AI-first digital engineering perspective. If you look at the entire value chain, it starts with experience, automation, insights, and then it comes down to data and infrastructure. To have broader implications in an enterprise, it's important that you have standardized data. So I would strongly recommend organizations to think about cloud platforms, where you can bring data together, create lakes, and hubs, warehouses, from where you can serve those use cases better. Obviously, you don't necessarily need to do this exercise first before you start getting the business value through AI. You can parallelly do these activities, if you can design your programs in an efficient manner. But it's important that if you want to have wider implications, you get your data centrally located, structured in a right way, cataloged, so that you know what data resides where, and it can be leveraged better.
I think I'd add to that is to turf out what you don't need. We're all pack rats about data, pack rats. We just keep getting it. Oh, we need this piece of data, bring it in here. We need that piece of data, bring it in here. I would suggest that most organizations have about 40% of data that they never use. And a typical thing, if you move house from one to the other, and you have 100 boxes, and 6 of those boxes, 20 of those boxes go upstairs into your loft until the next time you move and you take them along. Were those boxes useful? And it's the same with data.
But just to follow with your analogy, I mean, maybe you don't realize it at the moment, but there's something in one of those boxes that will be useful.
But you're never going to look because you just keep moving it on and on and on. There is that
Well,
value.
Seriously though, there seems to be this conundrum though, where in order to filter data, to cleanse data, you first have to understand what is the important data you want to keep. And it's kind of a paradox because, to answer that question, you actually have to analyze all of the data, looking for correlations, looking for patterns. Is there something in some of that data that you never anticipated that has predictive power? And so how do you manage this deluge of data with the idea that you might find that needle in the haystack that gives you predictive power that the bottom line is ultimately going to drive down your loss ratio?
I think as well you have to look between the link between correlation and causation with some of this stuff, because sometimes you might find something that looks like it makes a big difference but actually makes none. Yeah. So I think it's good to have expertise out there that can help us make that link between a data point and you made a good point earlier around having a black box in a car makes a difference from a psychological perspective, not necessarily from a speed perspective sometimes. So there's challenges that we have to go through to assess that properly. I think holding on to all of our data all the time is a habit that we have, and maybe not necessarily always the right thing to do.
It's about, to your point, making sure that the data that you really need to use, you know where it is, you know where to get to it, and you know that it has value. there is definitely data that has no value at all, ever, and it needs to be gone. Because the more you keep it, the more you proliferate it into the cloud, into this data lake, that data marsh. Oh, did I say that out loud? Oops. At the end of the day, there is a process that you have to take, and it is painful, it is slow, it is fraught with major pain and suffering and anger and frustration.
Like a spring cleaning of your house.
Yeah, it's like spring cleaning. Yeah, who wants to do that? But if you don't do that, we miss the great opportunities that data can give us.
Ashok, one for you. What do you think about the implications of this in terms of Sue is making the point, the importance of cleansing data on really continuously. For the insurance industry, what is happening to the role of the actuary and the arrival of data scientists? How is that working?
No, I think maybe the first thing I would say is I run actually a team of data scientists, and my best data scientists actually are trained actuaries.
Interesting.
So let me put it that way. That's the first thing, right? This is not actuaries or data scientists. It's actuaries and data scientists. So the once we kind of get that clear, I think a lot of the implications are easier to kind of understand.
Agreed. Actuaries are pre-specialized data scientists, really.
Exactly.
Yeah.
That's a very good point. All right. Last question, and we'll wrap it up. Do you think a lot of progress has been made in terms of deployment already of AI on IoT telematics data, or is it much more into the future?
We've just scratched the surface, in my view. There's a lot that can be done. There are certain carriers who have made a significant progress. Ashok mentioned a couple of examples, but I think a lot to be done. And with technology now providing a lot of possibilities of using telematics and AI and IoT, and in conjunction with AI, I believe we'll see a lot more applications as we go forward.
I think we're seeing a lot of examples of where these things unlock opportunities that we may not necessarily have got to before, which is really, really helpful. And I think we're at that kind of cusp point now.
They kind of unfold on a real-time basis, yes.
Yeah.
Anything to add to that, Ashok or Sue?
I'd agree. I think we've just scratched the surface, and I think there's a massive amount to be done in the future. But I think it's accelerating. I think there's an exponential growth in using these kind of tools and capabilities.
And it's also setting ourselves up to be able to use it, right? So like making sure organizations have the capability to do so. I mean, to sort of name drop Beazley again, we have a Beazley Digital division where we focused on interacting with APIs to connect to sort of external data points from brokers or others to do the right thing. And that's a new journey for us that we've just started on. And recognizing that those opportunities are coming is what we've got to do.
Absolutely. I kind of agree with all of it, and probably as a closing thing, I'll just say it's a great time to be in the insurance industry, regardless of whether you're with AXA XL or Beazley or anybody else. And especially if you're a digital talent, data science talent, actuarial talent, you should be in insurance.
Yeah.
Well said. Excellent. Thank you, everyone.
Thank you.
Thank you.